Hey everybody, thanks so much for tuning into Young Money Investments. My name is Cameron Benyon, and today we are going to be talking about a topic that has really been on my mind lately, with the economy obviously being in such turmoil and such volatility. I think this is an important topic, and that topic is the ability to short and how to make money as stocks go down. Now, as of recent, this past probably week or so, we've had a great turnaround in the market. My long-term accounts, I think, are up roughly around 20 to 21%, which is huge. Not nearly recovered to what they were kind of pre-October time, but it has really done well. The thing that I think is important is for us to be able to focus on the ability to still make money though in a down economy. Yes, I'm still going to be buying long-term companies as they reach these lower prices. But what I think is important, in the way I've positioned myself, is to have a small account that I am able to actually still short the market and make money on the downside. In this video today, we're going to talk about my strategies on how to make money in a smaller account in short-term volatility with negative things happening in the market. Let's get it. All right, guys, to start off the video, we are going to have a little bit of a history lesson and kind of look at the Dow Jones Industrial, as well as the NASDAQ, for probably about the past 40 years or so. And I think this is important to look at because history always repeats itself. That's what you heard in high school. It's what you hear in school all the time. History always repeats itself. So let's jump into the charts here really quick and take a look at what I am talking about. So if we pull this chart up here, this is the NASDAQ composite. I think I'm going to actually end up going with my first example here on the S&P 500. So as you can see down here, this is a 1-year chart. These candles are 1-month candles. And I have kind of done my research before doing the video and filmed out some times where we've had some downturns in the economy. So I think maybe the important time is to kind of start up closer, because a lot of us are younger. It's probably going to be easier to remember events that happened more recently as opposed to later on in time. So for a lot of you, obviously, we can remember right now, these past couple months or past few months, we have had quite a big red few months, right? It's been very bad lately. Overall, we're down roughly, from our peak to trough, or bottom of the chart here, we had about a 22% decline going into kind of the end of like Christmas time. And then we started to have a nice little rebound. That was a decline, like I said, of about 620 points, 21%. That's a very short time period to call that a recession or a bounce. We can go back in time a little bit more here, and we're going to remember, if you remember, the 07-08 housing crisis, or also known as the Great Recession. This was a big decline in the S&P 500 and stocks in general, and we did have kind of a global recession at that point. Now, that is why when I start thinking about our time period right now and why we most likely should not be rebounding right now, is we only have lasted 2 months of a negative downturn. As you can see, we had some bounces. We had 1, 2, 3, 4, 5 red candles before we had this bounce here, and it was a false bounce as it continued to sell off. The downturn, or the decline in these stocks, roughly was about, like I said, a year and a half. And it was about 52%, over half the value of stocks had declined. So what can we take from this chart here, from this S&P 500 chart? We can take that there have been declines and slides for years and years and years and years and years. That will always happen. That's what happens in a market. The important thing to remember is we have only slid for 2 months, and we have already suffered quite a slide. Now, the thing that I notice is we have not come up on any level of support. There isn't any level of support. So that leads me to believe that we still have more room, that we have more room to continue to decline. And this right here is most likely a false positive on the bounce. It just, to me, seems like we need to slide further in order to get an actual bounce. And how long that will take, who knows? We can also take a look really quick over here at the NASDAQ composite chart. This is also going to be a chart here. This is going to be the dot-com bubble burst. NASDAQ is predominantly technology companies and things like that. As you can see, it was at its peak right here of about 5,000 points. It came to its trough. It took roughly a year and a half, a little bit short of a year and a half, but the NASDAQ dropped over 50%. Now, the thing again to look at this is it continued to rebound all the way until the housing crisis and the recession in 07-08, when it ended up sliding another 51%. From that time period, so sorry, this slid 76%, this slid actually 52%. After that, it did end up recovering again and came up to here. Now, this is what I noticed. It took a total of how many bars? It took a total of 181 bars, which is roughly around 15 years for the NASDAQ to recover. So this is why, in my opinion, we need to have a strategy, not only to be long, but also have a strategy in being able to short and make money and trade the volatility. That is something that obviously I am trying to do, but I think it's important to do with a small account because you need to mitigate risk. You're learning a new skill. This is not something you're super skilled at. You need to practice it. And these are going to be my strategies and my steps on how to practice something like this. So guys, my first strategy that is so important when you are doing either long or short is going to be learning to cut your losses early. Knowing a set stop loss and having a set out point, regardless of whether you like that stop loss or not, is so crucial. It will help you from keeping your emotions out of the playing field. You won't be using your emotions, you're going to be using your logic that you created before you got into a specific position. Especially in shorts, this is very important because shorts have an infinite amount of ability to run up. There's no way the stock will go to zero and you only lose your principal invested. A stock can double, triple, quadruple, and you will continually experience losses that are double, triple, quadruple the amount of money you put in. That is why it's so important. That's very rare, and I think that is a kind of a cop-out excuse for why a lot of people say shorting a company is such a risky bet or such a risky gamble. I disagree with them. I think the benefit that you have as a trader in shorting a stock is that you see this parabolic spike, and just like Murphy's Law says, what goes up must come down. For me, I like shorting because of that ability. You have the ability to watch the ascending just parabolic spike, and it's very simple and usually able to go, you know what, if a company goes up, as we look at this chart right here, or the Dow Jones Industrial Average Index right before the Great Recession, it just continued to run and run and run. Well, what happens when a stock just continues to peak? It has to go down. And so that is why I like shorting, is because to me there is a setup, there is a pattern, there is a reason to think, why is it going to continue to go down? Now, one of the other strategies that I like to focus on is that as you start with a small position size, you're not going to be worried about what is happening too dramatically. You're not going to be stressed. You're not going to be worried if your position size is a decent size. It's not going to be a large part of your portfolio. I don't want you to risk too much of your account because this is a new skill. I just wanted to reiterate that just one more time. The next strategy that I take is I focus on negative financial news. I focus on pre-market futures. And what I mean by that is focusing on financial news such as negative trade war rumors. If there is something negative happening, usually that's going to affect the markets, it's going to affect the futures. And then when the markets end up opening up in the morning, you're going to see that downtrend pattern. It's a very good time to usually get in. There's usually other global exchanges. So us here in the United States, obviously there are markets that are opening. Let's say it's a Monday morning and it's early on before our markets have even opened. There's other markets in the world such as Australia's market. There's going to be the Japanese market. There's going to be the European market. So Japanese and European markets, you can look at these markets and go, okay, there's these markets, they're down as well right now. More likely than not, the United States market is also going to be taking a tumble. And so I use both the financial news as well as the global futures and the US futures, obviously, in deciding, am I going to short a major index or am I going to buy put options in the SPY and go from there. Next, if you're unable to short because of the broker that you're using, for example, if you're using Robinhood or one of those brokers that does not allow you the ability to short, you still have the option to make money on the downside, and that is going to be through buying short-term put options. You can buy long-term. I recommend doing short-term put options. That is going to be the most volatile, but it is also going to be the highest yield return during an intraday trade. So recently the SPY was up tremendously. I ended up buying short-term call options that expire a couple days after I had purchased them. So very volatile, but because the index was going up so rapidly and was going off of good trade news, I ended up making almost a 300% in a day. I believe it was up over 634% at one point intraday, just because options are so volatile. Now, with that being said, the downside is easily the same way. So you have to be careful using options, but options are an option to use on Robinhood if you are trying to short. And so you're going to want to buy short term. You don't want to do like long term, options. I always recommend doing short-term put options if you're trying to short a company. And again, if you're trying to make money on the upside, call options are going to be your way to go. The other way that you can always make money in the short term is through buying inverse ETFs that are based off of the indexes, such as the Nasdaq or off the S&P 500. ETFs like the VIX, so TVIX. You can also do the SDAO. I believe there's a couple other ones. You can actually buy these ETFs and they are leveraged. For that reason, I don't recommend holding these long term, but again, these are great swing trades or even sometimes day trades because of the volatility. If there is negativity going on in the market, you would want to buy either the TVIX is the ticker symbol of this ETF that actually goes up as the markets crash, and the SDOW, SDOW goes actually up as well when the markets end up crashing. So other great options if you don't have the ability to short. If you are shorting companies, the next tip that I'm going to give you is to actually find companies that will be most affected from a financial downturn. In this case, such as right now with what's going on with the trade war, you want to find companies that involve global trade. Companies, especially semiconductor companies right now. Micron has been hit extremely hard. Nvidia has been hit extremely hard. That's partly due to the cryptocurrency issue, but it has been hit very hard as well. Companies like Alibaba, that is it's a Chinese company, and the Chinese markets have been really hit, but also because of the trade war implications, Alibaba has taken a massive hit over the last year. Now, other companies such as Apple, because they are so large and they're in so many global markets, they have been hit extremely hard. And those are the kind of companies that you want to focus on shorting because they are going to take the biggest hit in a recession type scenario. Now, if you're not shorting simply because the markets are going down, if you're actually wanting to get into shorting, the big thing that I always look at is just if I am shorting a company, usually it is pre-market gappers, companies that are gapping up pre-market super high that have gone up 100%, 200%, 80%, sometimes even 400 or 500%, that have skyrocketed based off of either pharmaceutical news, things of that nature. I don't recommend getting into that. That is for a lot more experienced day traders. But I have always found that it is most easy to short companies when there is a parabolic spike, because again, like I said, what goes up must come down. So there you have it, guys. Those are going to be my steps and my recommendations and rules for shorting. Now, like I said, I'm not trying to go into great exact detail in terms of how I short intraday and day trades on shorts. But with the market volatility that has been going on, I think it's very important that we as traders kind of familiarize ourselves with all the news and kind of all of our options in terms of how we can make money in a downturn economy. I am a long-term investor, and do I long-term see these stocks being worth much more than where they are at? Could you definitely take that money and just continue to buy in to companies long-term? Sure. But I do feel and believe that if a recession hits or a bear market hits, it is going to take a while for it to recover. And so in that recovery time, if you do not know how to make money in the downside, you're not going to really be able to capitalize fully and be able to double and make your wealth so much more valuable to you in these very volatile times. So that is going to be my take for today. I hope this video was valuable. I hope there was a lot of information that you found helpful. If you did, please hit that like button. If you haven't already, hit that subscribe button. I would love to be more a part of your financial journey. I appreciate all the comments that I'm getting in these videos. I'm trying to make more interesting kind of, I don't know what I want to call it, more like hot topic videos so that people are a little bit more actively engaged. I love it. I love getting to interact with you guys, my subscribers. And if you have any other video ideas, leave it down in the comments section. Thank you so much for tuning into Young Money Investments. I will talk to y'all later. Bye.